Today, more than 10 billion digital payments happen in India every single month. From buying milk and vegetables to paying rent, petrol, and even auto rickshaw rides, almost everything is paid through UPI. But here's the crazy part. All of this happens without Visa, without Mastercard, without wallet balances, and almost entirely for free. So how does UPI actually work? What happens behind the scenes when you send someone 10 rupees? And how does India run the world's fastest, cheapest, and most scalable payment network today? Let's break it down in the simplest way possible. Before UPI existed, sending money in India was slow and frustrating. NEFT transfers took hours. RTGS had banking hours. IMPS was unreliable. And mobile wallets required manual top-ups. To make things worse, every bank had its own mobile app, its own interface, its own limits, and its own bugs. A person using HDFC struggled to send money to someone using SBI. And merchants needed expensive swipe machines just to accept digital. Payments UPI changed everything. UPI stands for Unified Payments Interface. It was created by NPCI, the National Payments Corporation of India. Here's the key thing to understand. UPI does not store your money. UPI does not hold your balance. UPI does not control your account. UPI is simply a bridge, a universal language that lets all banks talk to each other instantly. Think of it like WhatsApp for money. Your app, their app, your bank, their bank. Everyone speaks the same language. If you understand that, you understand UPI. Whenever you send money through UPI, four entities are involved. The first is the PSP, the payment service provider. Apps like PhoneIp, Google Pay, Paytm, Amazon Pay, or BIM, they handle the interface, show your transactions, and initiate your payment, but they don't actually move any money. The second entity is your bank, also called the issuer bank. This is where your money actually lives. When you send a payment, your bank checks your balance, verifies your UPI PIN, checks for fraud, and approves the transaction. The third entity is the receiver bank, the bank where the money is going. And finally, NPCI sits in the middle as the traffic controller. It routes the payment between both banks, confirms the transaction, and ensures speed and security. Thanks to NPCI's infrastructure, UPI runs with near-perfect uptime. So let's break down what actually happens when you send someone 10 rupees. Imagine you scan a Chaiwala's UPI QR code. This QR contains the receiver's UPI ID, the bank details, and NPCI routing information. Nothing sensitive is exposed. Your app prepares a payment request. It includes the amount, your bank, the receiver's bank, a timestamp, and your encrypted UPI PIN. NPCI receives this request and checks if everything is valid. Are both banks online? Is the sender's ID correct? Is the receiver's ID active? NPCI then sends the request to your bank. Your bank checks your balance, verifies your PIN, checks for suspicious activity, and approves the payment. NPCI then informs the receiver's bank to credit the 10 rupees. The receiver's bank instantly adds the money to their account. Finally, both apps receive confirmation messages. The Chaiwala's phone beeps, receive 10 rupees from you. End-to-end time, less than 1 second, on average. Around 800 to 900 milliseconds. So now the big question. Why is UPI free? UPI is free for 3 major reasons. First, there are no card networks involved. Visa and Mastercard charge MDR fees. UPI removes that middle layer completely. Second, peer-to-peer transfers cost almost nothing. A UPI transaction costs fractions of a pays and server processing. And third, digital payments help the government reduce cash handling costs, increase tax transparency, and improve financial inclusion. So UPI being free is not an accident, it is a strategic choice. But merchants do pay small fees in certain cases. UPI for businesses, recurring payments, UPI AutoPay, and credit cards on UPI have minor charges. Still, these are tiny compared to traditional card MDR, which is why Indian merchants accept UPI so happily. Most users don't know UPI has limits. There is usually a daily transfer limit of 1 lakh rupees per user. There are per transaction limits set by BANKS. UPI Lite allows small offline payments without PIN. UPI 123 Pay allows payments without internet or smartphones, and UPI Global now works in countries like UAE, Singapore, France, Nepal, Bhutan, and Sri Lanka. UPI scales to billions of payments because of 5 engineering decisions. First, it uses cloud-native distributed architecture with no single point of failure. Second, it settles transactions in real time across banks. Third, It uses virtual payment addresses, so nobody needs to share account numbers. Fourth, it is fully interoperable, any bank to any app. And fifth, UPI uses extremely lightweight data packets, allowing lightning-fast execution even on low internet speeds. Countries around the world are studying UPI as a model. Through an IPL, NPCI is exporting UPI technology to multiple nations. India is quietly building the financial backbone for the next generation of global payments. UPI is not just a payment method. It is a revolution in financial inclusion, a system where a tea seller, a vegetable vendor, a student, and a CEO all stand on the same digital payment platform. Fast, free, open, and built in India. This is the future of money. And India is leading it.